Because in a crisis, what you need is savings. What's gold and silver? It's savings. You can't really save dollars because they're constantly losing value through inflation. So it's a diminishing asset. But gold and silver has the broadest base of buyer of any instrument or asset because it's used across the entire economy. So there is always demand.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Welcome back, Reluctant Preppers. We have a returning guest that you all recognize. Lynette Zang is the Chief Market Analyst at ITM Trading. Lynette, thank you for joining us again here on Reluctant Preppers.
I'm very happy to be here, Dunn, again. You know that.
Today is Tuesday, May 28th, 2019. And we wanted to touch base with you before we get to a bunch of viewers' questions that have been submitted. They're always very enthusiastic about submitting questions ahead of one of our interviews with you. But before we get to that, could you bring us up to date on a recent report released by the IMF about global financial stability?
Oh, I sure can, because I've never seen this before. But, you know, in that report, they go over a lot of things. And one area where what I've never seen is that it's been at the most extreme, 100% level. And particularly advanced economy government bonds are 100% vulnerable, which means that we're at 100% risk level. I've never seen that before. And basically it means the bubble's ready to pop. We're just looking for the pin. And then what bailed us out the last time, which was a whole bunch of advanced economies, you know, taking on a tremendous amount of more debt. No, they can't do it now. 100% risk, 100% vulnerability. I've never seen, and I look at these reports every year. I've never seen them at 100% ever.
How often does this particular global financial stability report get issued?
Every year.
Okay. And is this something that people can follow up on if they want to take a look at and as well?
Oh, I would absolutely encourage you to. And Megan, we'll send you the link. You can put that link in so that they can go directly to the report. And I just did a whole YouTube video on it last Thursday, so just a couple days ago.
Okay.
And she can send you that link as well, where I get into specific topics. But this is definitely a report worth reading. And it's an easy read. I think anybody would have a pretty easy, I think it's pretty understandable. And if not, send in questions and we'll answer them.
Okay. We have, speaking of questions, we've got a whole bunch of viewers' questions that have been submitted ahead of this. And we'll, with your permission, we'd go ahead and plunge on into those.
Yeah. But I think it might, for newer viewers, let's explain who the IMF is.
Please,
so that they understand why this is so critical.
Yeah, give us some context on that report.
Right, because the IMF is the International Monetary Fund. And out of 196 countries in the world, 189 of them are all members of the IMF. And the representatives are the Treasury Secretaries and the heads of the central banks of these 189 countries. So this is a group that actually most likely knows what's going on, and they are not happy about what they see. That means our Treasury Secretary, our Federal Reserve Chief, is part of this operation, regardless of what they say when they come out on the TV and tell you, everything is going great, everything is so strong. That's because they want you to stay in the fiat money markets and the intangible markets. But that's who the IMF is. So if they say that you're at 100% vulnerable, the safest market, what's touted as the safest market in the world is at 100% vulnerable, that is not a good thing. That is definitely not a good thing.
It's even a bit remarkable that such a conclusion would even come out as part of an official publication. I mean, you've certainly dug up for us in the past things on the Federal Reserve Education, the Fred website, and others where you say, look, guys, this is what the chart is showing. Do you realize what this is?
Right.
But you're right. It doesn't match the narrative that's being brought forth on mainstream government, spokespeople, or on the mainstream financial news, that kind of thing. But it is interesting that nevertheless that information was published.
Right. Well, what do they say when they don't think anybody's watching? That goes back to my father, right? Do what I say and not what I do. They're going to tell you to put your money in stocks and in bonds and in mutual funds and ETFs because that benefits them. But also, when you look at what's happened in the first quarter for gold holdings and central bank gold holdings, the past 4 quarters, you have had the largest amount of central bank gold buying ever. Last year, for the whole year of 2018, it was the highest in 50 years. There was only one time, which was Bretton Woods, when countries were buying gold faster or more. Now, this most current report that came out looking at the previous 4 quarters, so certainly not for 2019, but the first quarter in 2019 is included in that. The largest amount of central bank gold buying ever, at the same time that they come out, all the central banks in the world come out and say that advanced economies, now if they had put emerging market economies, government bonds, well, yeah, that's like Venezuela and Argentina and all of that and hyperinflation. That would have made some sense. No. Advanced economies, that's the U.S., that's Europe, that's Japan, that's Great Britain. That would be, I think, Switzerland too, because that's in that whole mix. And they're telling you, and the U.S. 10-year Treasury is the foundation of the entire global system. Supposed to be the safest thing, that's what they want you to believe, the safest thing on the planet. But that is in that mix 100%. Yeah, I think it's very, very significant. I think people need to really pay attention. I mean, you're reluctant preppers. I'm also a reluctant prepper, right? It's not something I really wanted to have to do.
Right.
But I'm telling you, I am so thankful that I've been doing it for as long as I have, because I'm more ready than most other people. And basically what that report is telling you is, bam, we can wake up one day and that bubble could be popped.
Yep, that's one of the things that gives us all pause and serious concern when, again, not only your own gut feeling telling you something's really wrong, but then you start to see more and more evidence of it just accelerating. You mentioned the move to physical gold by central banks around the world, and even through the middle and basically this whole second half of 2018, there were data coming out. It always comes out in arrears about Russia and China, selling off U.S. Treasuries, for example, and accumulating gold at massive rates historically. So we put up some of those charts in the past, and corroborates what you're saying.
Oh, absolutely. And what's also interesting this particular time, and that was true for 2018, is the broad base of buyers, of central bank buyers. It's not just the Russia and the China and the India. It is a lot more that weren't buying before that are now going in to buy. So that is of note, is the broadening base of central bank buyers of gold. So it's the amount as well as that broadening base. That's critical. What do you think that might be telling us?
As you've pointed out several times in the past, it's like if the people in the room who have the most information are doing something, you better watch their actions, watch where the money is going.
And if you can emulate them, do it.
That's that's Gregory Manarino's plea to everyone as well. He says, don't listen to what they're saying, just look at what they're doing, and take advantage of that to make sure that you get your chips out of the casino and put them someplace safe before the rush for the exits happens.
Exactly.
So here's kind of an interesting twist on that. Tony Blaylock submitted a question, and this is based on some assumptions that you may or may not agree with, but he says, why can't the U.S. be like Japan, which owns everything and their economy has not crashed?
That's a great question. I love that. Their economy actually has crashed, and I just did, like the day before I did that, I did a whole piece, on Japan. The reason why they've been able to maintain this is because the whole world agreed that their economy was important enough for them to allow it to continue. Does that make sense?
Give us more, right? More insight into that.
Right. The Japanese economy is one of the larger global economies. And there's a lot of manufacturing that happens there. Not as much as it used to be, et cetera. But it's because we've allowed it. The whole world has allowed that to happen. But I just had asked somebody that lived in Japan, because if you look at Japan, what you see is deflation. And so it doesn't look like when you're doing research that prices are going up and this is happening and that's happening. But I actually reached out and said, if you're living in Japan and you have this experience, would you please, send us in your experience? And I wish I had that email in front of me. But even though they make it look like that there's no inflation, just like in this country and everywhere, it doesn't look like there's much inflation. But if you look at your personal experience and the cost, you had it and then you lost it. But you look at the cost of it, it looks very different. So actually, did Megan lose it again? Oh, she pulled up the email and then she lost it. But it is public confidence. It is public confidence. It's global confidence in Japan. That's why they've been able to do it for this long. But look at where they are. They were the ones that actually developed zombie firms, because they've had their interest rates anchored near zero since the 90s.
Right.
Okay. And they have done stimulus. They've done QE, so that money printing, then QQE, which is quantitative easing on steroids. Don't touch anything. I'm going to read this to you. So this is from somebody that lives in Japan that reached out and said, multi-decade resident in Japan here. Do we have inflation? Yes. Foodstuffs show on average 20% either increase in price or decrease in size or both. Right. Don't we all recognize that?
Yep.
This is my personal shopping experience, not government data. And I know that that's true because the government data doesn't look like anything as prices have gone up. Rural real estate remains depressed, urban less so, because even those in rural areas with money to invest put it into urban real estate because there is not growth in rural areas. Wow, that sounds like a bubble. By the way, government is spending money hand over fist, demolishing buildings to rebuild better and newer. Fine. But where did they get the money for it? Well, we know sales taxes are supposed to go up on October 1st. Maybe they will, maybe they won't. By the time anyone figures it out, it's already gone. And I'm not really sure what this means, but he says, FWIW, I notice a lot more imports from U.S., whether foodstuffs, supplements, etc.
For what it's worth.
This was
okay.
helpful.
Yeah.
So, for what it's worth. Oh, yeah, okay. So, Japan is not so great as they make it seem, and the people there are actually really suffering. And one of the things that when I read their report from their central bank, I thought it was really interesting. All of that QE, QQE, and yield curve control, which is YCC, all this vegetable soup, they drew 4 or 5 conclusions about how it didn't work, how it created zombie firms, how it's prolonged everything, all of this negative stuff, which obviously I don't have in front of me right now. But then the ultimate conclusion, and this was actually a report that was ordered by the New York Federal Reserve. The ultimate conclusion after they say how it didn't work, was that it was a raging success. And I'm not kidding. That is another report worth reading, Megan. Make sure we'll send you the link to that one too. Because if you read both of those, the Central Bank of Japan and the one from the IMF, what a picture you will get. And it really is about the central banks taking over direct and total control of all of the markets, which is exactly what Japan has done. I mean, they own, 90% of the Nikkei, the ETFs, not the Nikkei itself, but the ETFs.
Right.
You know, they're definitely monetizing and buying the Japanese bonds hand over fist. And they're buying the mortgage-backed securities and real estate in REITs as well. Gosh, where else are they doing that? Oh, everywhere. You know, why are these markets where they are, wherever they are? It's because of the government and the central bank intervention. These are not real. We've talked about it for so long. There is no good price discovery in any of these markets, and it can go on as long as the public agrees to it. Central banks already know they can't trust each other. Banks know that they can't trust each other. I mean, that's the interbank rate when that collapsed. Right? So central banks know it because of the Swiss surprise, the 2015, the Swiss surprise, and again, the Chinese surprise. So where is the confidence? It's in the public. And part of the problem that Japan is having is they want to raise the sales tax on October 1st. But because wages have not inflated, even though food costs and other things have, that could be, they may have, and we don't know this yet, but they may have reached the tipping point where they cannot tax the population more. Okay? The implication of that takes you to modern money theory. Modern money theory, the only difference between really what everybody's been doing with all this free money printing and 0% interest is that they wouldn't have to tax the public to spend. In that case, then the central bank creates the money and the government spends the money. But what happens when things are easy and cheap? They don't have any value. Think about, especially you guys look, I can't tell you what this peach cost me to create, but I can tell you I've been watching it grow and nurturing it and loving it, and now they're delicious. When I eat this peach, it has a lot of value to me, and Megan will laugh, but I savor it because of the effort that it took to grow this peach. Okay, I go to the grocery store and I buy peaches I don't do it, so I don't even know what they are. But if you go to organic peaches, which is, of course, that's what that is. Does anybody know how much they are? $5-6 a pound or something? I have no idea because fortunately I don't have to do that.
Yeah, that's good for you.
Right. Well, I've been working on it for a long time. But, how much value do I put in those peaches? I'll make a pie with it. I'll eat it. I may go, ooh, this is a really good peach, but it doesn't have as much value as the peach that took me time and effort. And money is no different. When money is cheap and easy and unlimited, that is when it loses all the rest of its value. And because it's been set up that way through inflation, that's why I just pulled up the purchasing power chart from the Federal Reserve. We're now about to break 0.039, right? That means that it's well below 4 cents. It's like we're just barely below, above 3 cents in value. Okay, why? Because It was easy to create it from debt. You
This
just
is
keep creating more and more debt.
comparing the value of a dollar now to the dollar back when the Fed was created in 1913. Is that what that chart is?
Exactly.
This is a
And the
related.
Federal Reserve holds it's my favorite chart.
Oh my gosh, and that's the thing. It's part of our missing financial education as we grow up to really understand this. Lakeside Bob 1 asks a related question. Just how bad has the low to zero interest over the last 10 years damaged the life insurance industry, the annuity industry, and pension plans? How bad are the state, local pension plans? How can these non-federal governments really fix the problem without taxing people to the point of, to the point of revolt?
They can't, and that's what's really kind of playing out in Japan right now. So it's really good to watch, and there is a lot of revolt, the rise of populism, because he's absolutely right. So much damage has been done to the system at the zero or negative interest rate policy. But the problem for the governments is they already inflated all the value out of the currencies. So when you have no value and you can't inflate any more value out, what do you have to do? You start to attack principal. And that's what those zero interest rates and those negative interest rates are about. But things that are long term, because that's short term. And by the way, there are 28 interest rate inversions in the US, 28 right now. You get more money to hold your money overnight, that Fed funds rate, than you do to hold it for 3 months or 6 months. And I'd have to look because I know that even inverted for 10 years. You get paid more overnight than to hold it for 10 years. So it has decimated the pension, and the pension plans were already dependent upon an overvalued stock market and an overvalued bond market. And a part of the big problem is the rise of zombie firms, because when you can refinance your debt or grow more debt at 0% interest or even getting paid to do so, then firms that would have been forced to declare bankruptcy, and they could be, firms that everybody knows and is used to, larger firms, well, they just keep refinancing and using that up, and they become what's called zombie firms, which by definition is a firm that has not generated enough income to pay their expenses for 3 years without the prospect of being able to do so in the future, which quite frankly sounds like an awful lot of the unicorns to me.
Yeah. This is a related question from L. Taylor Armour, who asks, Hi, Lynette. I'd like to ask if there is a limit to the amount of money the Fed can inject into the system, i.e. quantitative easing. And if there is no limit, why can't they just simply balance the budget?
Well, there is no limit. It's losing impact every time they do that. I've shown that in a bunch of graphs where the last time it had absolutely zero impact. But yes, they can keep doing that, but they can't balance the budget because they create it on the back of debt. So how do you balance the budget? And the tax income that they're getting, and even the fees and the fines that they submit, I mean, we're still running deficits. So we can't balance the budget because we keep spending way more than we're taking in. And the interest on all that debt, because deficit spending, that means we're funding the rest of it with debt. Well, that interest is compounding. Last time I checked, so this was 2009, so it's way worse now. It was 77% of the debt that we were servicing was compounding interest. You're never going to balance that budget. Even if you stop spending, it will continue to grow because of that compounding interest. But they can keep printing more.
That leads you into modern money theory. Then you can just go to an infinite supply of money. This is a different question, and it says, according to Brent Johnson's dollar milkshake theory, the dollar is going to get a lot stronger, and interest rates are going to get much higher, and bonds will suffer, and stock and gold will both perform well. Some people are saying that hasn't been playing out because interest rates are not yet going higher. Do you have an opinion on whether you think that's a realistic scenario going forward?
Well, gold will get a lot stronger because it's been artificially suppressed. So it's kind of like putting your hand on a spring, and when you remove your hand, you're going to see gold shoot. But stocks are so severely overvalued. I mean, I remember looking at the markets in 99 and 2000 where price earnings were non-existent, or 825 to 1. I mean, it was just stupid. And I'm going, this is just stupid. It's even stupider today. And the reason why you have interest rates where they are is because we've been trained to think that the only option is stocks or bonds, right? So if you're afraid of stocks, then you're buying bonds, but this is debt. And the problem with debt is you can't fix a too much debt problem with more debt. So when interest rates spike, and I don't have this in front of me, I think it's somewhere above 3.25%. Well, that's more about a loss of confidence, and it's that confidence piece that I'm watching get whittled away, and that really is the pin that then all of the central bank efforts and none of the government efforts, it's not going to work to hold anything together. The only reason why it's together is that confidence, and I'm watching it erode.
There's another potential loss of confidence that's been emerging, and that's about, you mentioned central banks wanting to accumulate physical gold and silver. Some of them have been asking for physical gold and not getting theirs back repatriated. Gurpreet Singh asks, if Brexit happens, will international, institutional, and individual investors move their gold holdings to their own countries? If they discover that not all the gold is existing physically, will it impact prices? How will they take delivery?
Well, those are all really, really good questions. I would have to take a look at who continues to hold their gold in the Bank of England, because, I mean, nobody gets to audit any of these guys, so really who knows if it exists. But you are right. There have been, really, it's been a trend that's been going on, I think, since 2011, maybe even a little bit earlier than that, to repatriate your gold. So there's something that the central banks know. If you don't hold it, you don't own it. It really is that simple. So if governments attempt, if you or I have a contract on the London Bullion Market Exchange or, one of those, they'll just pay it off with cash. It could be a force majeure. So it's not really that big a deal. I mean, it is a big deal, but they can still control the prices. If a central bank asks for its gold back and they don't get it, and they made that visible, well, that would certainly, look, supply and demand, there's a finite amount of gold. It's an unlimited amount of fiat money, but there's a finite amount of gold. So, yeah, I would think we would see, but there's even a bigger amount of derivative gold, right? So the visible price that you or I could see can continue to be manipulated. Frankly, it's cheap and it's easy. That's a good question. Would you ask me that again and let me just think about that for a sec?
Sure.
Let's look at that question again.
Yeah, I'll go back there.
And maybe you can help me answer it too, Dunnigan. You're
well,
smart.
I think part of this is about the real risk of believing that you are an owner of physical gold, but it's not in your possession. So if it's being in a pooled storage somewhere, because he's talking about if they discover that not all the gold is existing physically, and we've had, for example, economist John Adams on from Australia talking about why can't Australia repatriate its gold. I mean, some people say that even Nixon closing the gold convertibility window back in '71 was partially under pressure from France wanting to convert dollars into gold, and then now you had Germany back over the last 5 years trying to repatriate their gold and being told you're not going to get it anytime soon. So,
well, I believe that Germany just recently did get the rest of their gold repatriated. Okay. I think it was February. Okay. I could be wrong, but I think that they managed to. But yeah,
all I was getting into was the concern of a confidence game. If people and banks and governments start to realize that it's suddenly becoming like the end of a game of musical chairs, where suddenly there's
Yes.
this everybody wanting to make sure that they've got a place to sit, and afraid that if they don't make their move now, there aren't going to be enough to go around. That's I think the real heart of the concern.
And I think they're right, because the motto is, if you don't hold it, you don't own it. Part of the good piece about gold is and silver too, physical in your possession, is you own it without any counterparty risk. If somebody else is holding it, you got counterparty risk, whether you're an individual or a central bank. So I think that, I hold my own gold. I don't hold it in my house, but I hold it near enough that I could walk there and get it if I needed to.
Julie asks, what are the benefits of owning numismatics in gold as opposed to other types of gold coins or bullion? And would these benefits be lessened after, quote, the crash?
Well, for me, because, everybody has to understand that my history and my experiences, just like everybody else, guides you to your belief. And when I was 10 in 1964, my Uncle Al had safes of numismatic coins. Well, at that point, it was illegal to hold more than 5 ounces of gold, and yet he probably had 3,000 ounces or so in those 2 safes. So my personal experience was in a way to hold gold when it was illegal to do so. Because history, whether it's the U.S. history or the global history, has shown us that governments don't want you to hold your wealth, and they certainly don't want it outside of their ability to tax it and to control it or anything else.
Or bail it in,
Or bail it in, exactly. So for me, I see no way around an overt confiscation, because they've been doing it since the day you were born, and it's just hard for me to imagine at this last hour they're going to go, oh wait, you get to hold your wealth. So I think there's going to be an overt confiscation. Having said that, since my experience with the numismatic coins was to be able to hold as many as you wanted to, because you were a collector, not because it was money. But my Uncle Al saying, if anything happens to me, Aunt Bertie will be well taken care of the rest of her life. Well, I believe my research. I believe there's going to be an overt confiscation. So goes back to what if I'm right and what if I'm wrong? If I own a collectible coin and I'm wrong, so what? I still have an ounce of gold. Mm-hmm. If I own bullion and they confiscate, then I'm not saying there won't be a black market for it, but I'm either going to have to turn it in or I'm going to have to use it in the black market, and I don't want to. I'm executing a strategy. I want to have the legal kind of gold that I can use through this crisis to build my wealth base and generate income for the rest of my life. So I feel a lot more comfortable with collectible numismatic and semi-numismatic gold. And I use the IRS as a guideline. Can't hold numismatic coins inside, or the old numismatic coins inside of an IRA, can you?
No.
Why? Gold quantity or gold, the gold content is standardized.
Sure. Thought-provoking.
It is.
Related question here by T. Sharp, who asks, hello, Lynette. I have and am continuing to purchase silver and gold with dollars. However, sometimes I wonder, why am I purchasing silver and gold now to have to purchase dollars later? Thanks for your answer in advance.
Okay. That's because when it's time for you to convert the silver and the gold back into a currency, a good, or a service, it will hold the current level, or actually you're getting more purchasing power because the price is so suppressed. Mm-hmm. But the whole point of gold and silver is to hold its value over time, not short-term manipulated time, but longer-term time. So if you're accumulating it now and you're doing it for what's coming up, you're still going to be able to buy your peaches at the store if you haven't put your tree in. History tells us 100% of the time you can convert gold and silver into any currency, any good, or any service. It also tells us that you cannot always convert that fiat currency into gold, silver, goods, or services. So that's why you do it. You accumulate it now to protect your purchasing power when it matters.
Here's a different angle from someone who's a mortgage holder. Kay Halsey asks, can you give me an example of a typical 30-year mortgage that goes through a reset? Example, what could the interest rate be? How bad could the homeowner get hurt?
Well, if it's a fixed rate mortgage, then really what happens is they will entice you into signing new documents that, and then, look at what happened in 2008, and those people that reset their mortgages then that were going under, those terms are abysmal. And it's not necessarily so much in the interest rate, but it is in the terms of the whole document. What gold will help you do is pay that off so that you don't have to reset your mortgage because you can't make those payments, right? So a fixed rate mortgage is actually like fixed rate debt to the government. That's easy to pay off with currencies that have no value. On the other side of it, the variable rates, those are the ones that are most impacted by interest rate changes like credit card debt. That's a big problem for most people when we go into hyperinflation, because the interest rates go up so high that you can, no matter how much payment you make, you're never going to get it paid off. But for mortgages, that's part of the strategy, is making sure you have enough gold so that when push comes to shove, bam, and they reset gold, right? So gold goes from $12.77 now. Let me give you an example. Make life easy. Let's just say that at the moment your mortgage is $100,000. The current fundamental value of gold, just to make my life easy, is $10,000. That means that you need 10 ounces of gold when it goes to its fundamental value to pay off that $100,000 mortgage. But right now, that 10 ounces of gold will cost you what, $13,000 to pay off a $100,000 mortgage? And if you do the collectibles, depending upon what you do, they typically outperform bullion. So who knows? By the time it's time to pay that mortgage off, instead of it taking 10 ounces, maybe it only takes one. Because of, in terms of dollars, how much it's gone up. Does that make sense?
So that's the strategy you've been describing. If people are anticipating this reset that's going to impact the inflation of the fiat currency, but they have something that can survive that and not diminish in value, but rather increase relative, then they'll allow them easier for them to pay off their debts.
Exactly.
Okay. This is another one about...
We have formulas. Oh, I'm sorry, but I was going to say we have formulas. So based upon your individual circumstance and your goals and all of that, we can calculate out how much gold and silver you are likely to need based upon whatever your specific needs are. And we put it all in a spreadsheet. It's really quite nice.
This is a related question in that they talk about the diminished value of the fiat and how it holds up versus real money. 11 above asks, why do governments mint gold and silver coins? There's American eagles, Canadian maple leafs, Australian kangaroos, Royal Britannias, Mexican libertads, even China has the pandas. The coins have a face value of $1, £1, £1, but the street value is 20 times that. Isn't it a sign that purchasing power is greatly diminished? So why are they still produced?
Well, I don't actually know why they would be producing it, other than to let you know that they don't really think it has much value, right? I mean, the 1 ounce American Eagle has a $50 face value because the official price of U.S. gold is $42.22. So I think it's more, plus, here's the thing. When you're in a crisis, historically, what has really bailed us out of the crisis and enabled the economy to move along when it's a major thing? Savings. Well, gold is actually savings-based money. Mm-hmm. So like in China, citizens, and in this country, we couldn't hold gold again until I think it was 76. In China, in 2000, I think it was 2006, the citizens were allowed to own gold again. If indeed this gold is held inside of like IRAs in this country, mm-hmm. how easy is it just to go in and do a big sweep and claim it all and leave? I mean, some here think that they would just leave face value $50. And they would, but they'd get a lot of pushback. I think they'll do whatever the manipulated market is. So it's actually a way to get paid to have our citizens accumulate and then make it easy to take it away from them again.
I had not heard that one before. That's interesting. So
think about it.
Official bullion approved storage for individual retirement accounts could be a way to just farm out the accumulation of physical gold and silver to the people in a form that can still be swept up by the government. That's
exactly, and get paid to do it. That's what J.P. Morgan's doing with the silver and the gold markets on the physical side and the digital side. I mean, it's a great gig.
This is another question about after a crash and reset, then how does this play out? Harold Dye asks, all we hear from many responsible monetary asset investors is buy gold and silver. As investors, we get that, and we're capitalizing on opportunity to buy these assets at depressed prices. As the fiat money system collapses, gold and silver values may skyrocket. The money system will reset in some new form, and at some point, gold and silver investors will feel the value gold and silver has peaked. At that time, investors that hold physical gold and silver will want to maximize the value of their assets and perhaps sell. My question is, where does an investor find a reputable buyer or buyers for the full value of these assets?
Well, I mean, that's what we do. You want to find a reputable dealer. We've been around since 95, and we have long-term relationships with wholesalers. So you do need to work with a reputable dealer. But going back to the rest of the meat of that, everybody wants to buy low and sell high. That's why I talk about patterns all the time and also paying attention to the smart money. So it isn't necessarily that you think gold has peaked and that's when you want to sell it. Sell it for what? Dollars? I don't think so. Mm-hmm. What you want to do is you want to pay attention to the income producing assets that are tangible, because the intangible assets will mostly evaporate away or morph into something else that's probably not in your best interest. So part of the strategy is looking at the patterns on all of these instruments and assets and knowing when to use some of the gold to pay off that fixed rate debt, knowing when to use some of the gold to convert into, I don't know, maybe a tollway where you can then generate income from cars going through your toll booths, or a Capitol building, or water rights, or something that's going to generate income that you cannot outlive. And, all of that stuff that's been bought up by all of these companies, SoftBank, I'm going to do something on SoftBank soon. But SoftBank has so much debt, yet they're going around on a global buying spree and taking on even more debt. When this debt bubble bursts, what do you think is going to happen to all those properties, those real physical properties that SoftBank bought? They're coming back on the market a whole lot cheaper because they're not the only ones that are doing that. So the gold that you have here, when we see the accumulation pattern of the insiders, the smartest money in the room, okay, you're going to take some of your gold holdings and convert it into those income producing assets. Again, that goes back to the strategy and what your goals are and what your circumstances are. Everybody probably knows I have children and I have grandchildren. So my big thing is to leave them in a good fiscal place with a foundation, because otherwise they're going to be participating in the sharing economy on the wrong side. And I want them to be on the right side of that. And I want all of us to have a choice and not, be in that circumstance. But that's what you do with gold. That's really what the strategy is. I've been studying currencies and life cycles since 1987. The patterns always repeat. So the strategy that I developed for myself, that we all the strategy specialists, we all use the same strategy, just tweaked for the individual, so you know what to do, with what, and when to do it. But you got to have somebody reputable.
One thing you reminded me of, back in the depths of the post-2008 real estate collapse and everything, we were driving, rather than driving around the Chicago way, which is never comfortable for us, we instead went around through the North Passage across the Mackinac Bridge and over there, and saw along the north shore of Lake Huron, Lake Michigan there, and about half of the lakeshore properties were for sale. I mean, you could just drive along, for sale, because a lot of people, as we were told, who were very financially successful in either Detroit or other places around there, had bought up these vacation properties, for example, and now they had two places. But when the crash happened, they couldn't hang on to everything, so they had to keep their. Sometimes they didn't even get to keep their primary residence. They had to downsize that too, but at least they had to sell off their vacation property. So what was considered very prime, pristine, desirable lakeshore property, that kind of thing, or the boats that they were going to use on there, that sort of thing, suddenly came up on the market at a fraction of the price that they would have before. And again, it's this supply and demand thing, where people who were holding on to something that had retained its value or even appreciated in value could make some moves that you couldn't have afforded to make other time of life.
Right, because in a crisis, what you need is savings. What's gold and silver? It's savings. You can't really save dollars because they're constantly losing value through inflation. So it's a diminishing asset. But gold and silver has the broadest base of buyer of any instrument or asset because it's used across the entire economy. So there is always demand. Maybe sometimes less and other times more, but there's always. Thank you, Uncle Al. I'm not kidding you. Over the years, when I went through a divorce and I had to support kids and do this and whatever, when I got into a tough time, if I had savings, it wasn't so tough a time. If I didn't have savings, well, I'm a tangible gal. I had tangibles that I could liquidate, so they were savings. That's what gold and silver is. The whole point of money, originally anyway, we've lost sight of this, but the whole point of money is to be able to hold the value, since we get paid in terms of money, to hold the value of your labor over time, so that no matter when you use that money, you're always fairly compensated for your labor. What a concept. I think it's a great one. And I think that's the kind of system I want to see us go into. If we have enough people that are aware of this, we got a shot at that.
Here's a question about privacy. Chris Barnes asks, are the gold and silver bullion companies required to hold all sales records for the federal government to evaluate in the future? In other words, how would the federal government know all of my purchases of gold and silver if they choose to confiscate private wealth of American citizens?
Well, that's a really good question, because privacy is a huge key. At this juncture, that's probably a better question to ask Eric, because he does all of the administration stuff. Mm-hmm. But what I can tell you is that at this juncture, we are not legally obligated to report any part of the transaction. But of course, for the IRS, we have to hold all records for 7 years. So I would imagine that they could go back 7 years if they subpoenaed our records. However, having said that, and understanding that since it's physical and since it's tangible, like quite honestly, this is what I like to give for gifts. So because it's physical, who's to say that I didn't give it to my plumber for his services or something else? So it'd be really, they could prove that you bought it, but they couldn't necessarily prove what you did with it.
Right, because you're not required as an individual to maintain some chain of custody. I think
Exactly.
Last question, if we can squeak one more in. CPOM 11 says, the gold-silver ratio is about 85 to 1, but, quote, should be about 15 to 1 historically. So is gold overvalued or silver undervalued? Which one will appreciate more when the dust settles?
Well, that's an interesting, and I've done one on gold and silver's performance through hyperinflationary events. They are both severely undervalued, and they will track, 85, 60, whatever. They'll track pretty wide for a while, get a little bit more narrow, but at the end of the day, gold, even through the hyperinflation, has a tendency to outperform the silver, but silver is perfect for barterability. So to go, buy your peaches, that's an apple off my tree, by the way.
Nice.
Look at how big that is. I never got one that big before. But, and that was for Megan to take home. Oh, well. But you want both. You need both because they both have different functions. I like a variety of sizes of silver so that if I needed to go and put a gallon of gas in my car, I would have the ability to do so. I don't want to use gold for that. But it's easier with the appreciation to convert gold into silver if you needed to. So that would be something else to take into consideration as well. But you need both. And I'm sorry about that because nobody ever calls me here.
Since you've showed us the peach that you raised and the apple that you raised, could you bring us up to date on your urban farm and what else? Oh, look at that.
Oh, I'm having the best time right now. These aren't so big, but maybe next year we'll get better. Some poblanos, and I'm so thrilled. Garlic.
Wow.
Garlic. I've been eating potatoes from my garden. I mean, look, I started this in 2010. I am finally getting production. I'm so excited. The peaches are so sweet. They're just incredible. And I have this whole tree full of plums. They're only about this big, but this is the first year I've gotten plums on them.
Hey.
And it's loaded. My fig trees, probably within a week, the peaches I might have a couple more weeks, but they have a kind of a short life or short season. And then we'll go into the figs, the white figs and the brown figs. And I have a wild mallard duck that husband and a wife that started to come to the pond once I became a certified wildlife habitat. She's built a nest in my gardens, and she's there all the time. I mean, she does get out to swim around in the pond a little bit, but we are probably going to have baby mallards, I would say maybe within the week.
They're so cute.
So I can't even tell you how happy I am and how fabulous. We've handled the crane issue. We had a crane that came and was killing our fish. But what we did for those that might also have this issue, because we tried the netting, what we did was I got motion sensitive water things.
Oh. And
because my pond is so big, I had to do 3 of them. But if anything goes by that pond, it's shooting out this spray of water, and now the fish are much, much happier.
Interesting.
And I got a bunch of baby butterfly kois in there too. So cute.
Oh wow. Well, we wanted to mention before we let you go that Dunnigan Kaiser and the Reluctant Preppers will be at, and Melody Kaiser and HealingYourself.life will be at the Red Pill Expo, which is hosted by G. Edward Griffin. It's not this weekend, but the following weekend of June 7th, 8th, and 9th in Hartford, Connecticut. So there's a lot of big name speakers there, some of whom we both know, David Morgan among others. So look for meeting us face to face at the Red Pill Expo. And anybody who mentions, if you use the keyword preppers, that's PREPPERS, when you register, you get $30 off as well. So anybody, we'd love to meet you there. And Lynette,
yeah, that'd be a great event.
I know we're going to see a lot of people of like mind there who are concerned about a lot of the things that you're concerned about. And as always, a favorite with our audience. So thanks for joining us here again on Reluctant Preppers.
Always a pleasure. You know I love it too. Have a great time.
Thanks. Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.